You're welcome, friends. In this video we are looking at reaction from a higher time frame zone and the power behind it. So quickly, we are making use of the Euro USD, and currently we are looking at the weekly chart. In my previous video, we actually capitalize on this move down, okay, down to the zone. But in this video we want to capitalize on the reaction up. Okay, that's exactly what we want to really look at in this video. The main concept is that when price approaches and gets to a particular zone of a higher time frame, irrespective of the direction, we can expect a reaction, at least a reaction. And any reaction, as we can see on the weekly zone, weekly demand zone, it's going to be a very significant move on a much lower time frame. So all we need to do is to scale down to a much lower time frame. In my previous video, I explained how we can predict the fact that, or the probability of market getting down to this zone. But in this video, like I said, we are going to be focusing on this reaction. In our next slide, we are looking at daily time frame. What this simply entails is for us to, further refine our zone. Okay, as you can see, this is how we refined the weekly demand zone to the daily demand zone. So whatever is here is what you are seeing here. As simple as that. And still on the daily demand zone, you can see that price is actually now at the daily demand zone, and in fact has started reacting. When we see this, for us to capitalize on the move up, we can scale down to a lower time frame like the 1 hour. And on the 1 hour, what we want to see is simply a change of character from this bearish movement to a bullish movement. Once we have the change of character on the 1 hour time frame, we can now scale down to a much lower time frame. Okay, but as you can see, we already have a change of character here, and there is no harm in taking this trade based on this last sell to buy candle of the order block. There is no harm in taking this trade, save for the fact that we have a stop loss of 56 pips and risk to reward ratio of 1.3 arrow. Majority of persons are actually comfortable with this kind of trade, and it is left to you. But meanwhile, this is where we have the change of character. When we have this, when we have this move, then we are rest assured to a very large degree that the market has changed from a bearish environment to a bullish environment. Like I said, here we have the change of character on the 1 hour, but I'm sure you wouldn't like the stop loss range and also the small risk to reward ratio. So let's scale down to a lower time frame. Okay, but the truth is that this market actually extended more than this. So instead of having just 1.3 arrow, it is possible to have larger risk to reward ratio even with this 56 pips stop, which is not a bad trade. But then we are scaling down to a much lower time frame, and we are on the 15 minutes time frame, and you can see on the 15 minutes time frame we have a demand zone, a 15 minutes demand zone here, which is clearly shown. 15 minutes demand zone. Okay, let me bring this so that you will see it. 15 minutes demand zone that took price up, that led to this change of character. Okay, but what we notice is that price actually did not get to our zone before it took off. Okay, so if your entry is based on this 15 minutes demand zone marked here, by myself, it means that in this particular trade I would have missed the entry. But there are several ways we could have entered as well. If you notice this imbalance, there's imbalance here, and this is the imbalance candle. Most people would like to say, let us enter at 50% of the gap of the fair value gap. 50% of the fair value gap. Okay, but you can actually as well enter at the start of the gap. You can enter at the start of the gap. What I mean here, you can enter here and place your stop below the imbalance candle. If you have done that, you would have been in this trade as well. So that's one way you could have entered this trade successfully. It all depends on your entry strategy. Now, if you look at this as well, I could also have entered this trade here and then put my stop just below to be very safe. Okay, why? What's the logic behind this? You can see that after price created a change of character, created a higher high, the price actually created what? A very beautiful swing low, a higher low. But this higher low eventually did not break structure, did not break the structure. Okay, since this higher low did not break the structure, this higher low can then be regarded most likely as a weak low that could be run through or manipulated. So if I have that thought, I could just put my entry here, knowing that these stops here will be manipulated, put my entry here and my stop, and allow the market to take me in. So considering this entry 1 and 2, you could have been on the trade. Okay, you could have been on the trade if you consider that. Okay, we'll move on to the next. Now we are looking at another example. Now take note, assuming we have capitalized on this move up, we are also seeing another higher time frame, 12-hour supply zone. So we also expect a reaction down. Now we want to capitalize on this reaction down. Okay, take note, we have taken this, at least taking some profit out of this move. They want to capitalize on this reaction down. So we scale down to a lower time frame. Right now we are on the 15 minutes time frame. As you can see, there is a slight break of structure here, and this could be seen as an order block. 15 minutes order block made up of 1, 2, 3, 4 candles. But then this is not so convincing. Because of that, we can scale down to a much lower time frame. In this case, the 5 minutes time frame. And on the 5 minutes time frame, you can see a lot of opportunities. See this order block here, or this 5 minute supply zone. Price came back, tapped into it, and gave us a nice trade. Okay, that's one of it. We can also trade this, place our entry just at the tip of this order block, and price will equally give us our nice trade. Okay, so like I said here, you can also scale down lower to M1 for more opportunities for a higher risk to reward ratio. Okay, so in this case, you want to be very safe, for instance, so you have to put your stop above this high, or we can decide to put our stop above this imbalance candle. Okay, and it happens, it works a lot, because if the intention of price going up is to balance this imbalance that is here, you can see an imbalance between this point and this point, or to balance this little imbalance that is left, then there is no reason for price to trade above the imbalance candle. So this is also logical. It happens, it works. Okay, so in that case, you have a higher risk to reward ratio of 6.7 arrow compared to 2.4 arrow. So meanwhile, like I said, you can scale down to the 1 minute to definitely see more opportunities and to get a higher risk to reward ratio. And that's exactly what we have here. You can see the 5 minutes order block, the 15 minutes supply zone, and then the 1 minute supply zone. You can see that we have a change of character. Please notice a change of character on the M1. Let's zoom in to see the supply zone or the break of structure, okay, or the order block. Now we can also see a nice setup for continuation trade, where we notice this break. You see this manipulation and then this break. So opportunities upon opportunities. We have one opportunity here, and we have one opportunity here, and even more opportunities if you look more carefully. Alright, so let's go to the next slide and see what we have. Yes, it's trying to zoom in, and what we have is this. You can see this block that grab this liquidity and then lead to break of structure and equally change of character is clearly worthy of note. So we have this M1, price actually came, tapped into it and gave us our trade. And as price is tapping into it, it further manipulated these highs and then break structure. This is a continuation trade now, and you see how beautifully price went, tapped into the M1 supply zone and gave us a beautiful opportunity to trade. So that's all I have for us, and it's so simple for us just to capitalize on the reaction. I know this is pretty basic, but if we are consistently applying these rules and the right psychology, we will go far in our trading. So please, thank you once again for your time. Like and subscribe if you find the content or any part of the content useful. Thank you.